All right, good morning, everybody. Hopefully, everybody's feeling well. Shout out to you guys being here. About to jump right into this thing. Let me go ahead and get my screen share cooked up, and we'll get this party started. Hopefully, everybody slept well, all that good stuff. Couple things to go over really this morning. We'll talk about valuations, a few tickers. I know some people see the market right now move down a little bit, but nothing crazy. Hopefully, you guys have those alerts still set for the SPY as well as the QQQ and NVIDIA and company. So we will have an opportunity to take a look there. Let me get all this perfect. It's already pulled up. Perfect. We're good to go. And let's jump right into this. Let me share my screen. And here we are. So what I do see specifically, go to the QQQ real quick. So the Qs, I want you guys to watch this 593 level today. When I do look at this 593 level, we do have, a major move potentially to the downside where we're gap down. I also asked you to set an alert at 586. So just looking over the past month, we see here in this time frame, we have a rising wedge pattern. So I want you guys, everyone, to go to the daily time frame here. And I want you to analyze this rising wedge pattern because that's what we actually have here, a rising wedge. So this is where the QQQ, to me, all of these stocks are a bit inflated and overvalued, of course, but that won't be what brings none of them down. I want to make that clear. Just because a ticker is overvalued doesn't mean the stock price is going to decrease. What specifically I'm speaking about is merely profit taking. I expect profits to be taken off the board. And I think that a NASDAQ can fall anywhere from 2 to 5% from here. And it's just profit taking. It's not anything significant. So I dropped this morning and I talked about over the coming month, I projected a controlled pullback across the broader markets. So after the strong run we've seen, I expect 2 to 5% downside from current levels as we head into profit taking territory. That's it. This would be a healthy breather for the markets before setting up the next leg higher. So I want to be clear on that. The ARKK is one of our primary high growth ETFs, not our only. We've also discussed many other high growth names that have went up over the past few months. A lot of the growth names, just as an example, within the ARK have already made strong moves to the upside with impressive consistency. That's exactly what I'm watching closely. These names may have some near-term cooling, but they've positioned themselves well for long-term setups. So a lot of times people have been asking me, hey, where are the discounts at? And like I said before, how could we have a discount in a month that's usually bearish, which is September, but yet we're going to close this month out bullish, right? We're going to close this month higher than where we came into it. So we did obviously see a little bit of a sell-off. So right now, if we did the mathematics going into end of last month, we're up about $18 from where we closed at last month. So we did draw down on September 2nd, but that was really the only bad day in the market so far this month, right? Was September 2nd. Other than that, I mean, this market has been moving up to the upside. We had this little drop where we came and touched this point on the 17th, but immediately popped right back, and that pushed us up to make a new all-time high. So what I see critically here for us to pay attention to is our high asset allocation names that sit high within our ETFs. So NVIDIA right now is at 175 pre-market. So NVIDIA did not, I know it had this bull flat pattern. I know a lot of us on, what was that? Today's Thursday. It was Tuesday. It was a lot of us that were thinking, saying, hey, maybe we can finally get this breakout above this 183 level. But then NVIDIA rejected. It wasn't able to actually take that move higher. So now when I take a look at this name, NVDA, they don't have enough juice right now to break through that level. So that's one that we could X off the board, and that's your top one. So is Apple going to come in and do it? I don't think so. Apple's had a nice run. Maybe they go to 260. Everyone knows that I was, and we'll cover MU in a second. Actually, you know what? Since I have it here, let me do it now. I'm gonna pull up Apple. I want y'all to put MU an alert on 157. To me, MU can come down all the way to $150 a share. Full stop. I want to say this so everyone understands my positioning on semiconductors. Of course, I'm not bearish long term, but in the short term, I think we see some profit taking. AVGO, full stop. I am short right now on AVGO. I have a high belief and high probability that AVGO gets below 330. So MU is coming back down to 150. Remember, a few weeks ago, we talked about MU and exploded. We got MU to go up $40 from our entry or our initial entry on those call positions. Obviously, we started off loading in the 140s. Some of us sold in the 150s who kept runners, right? None of us probably kept until 170. I don't think any of us really expected it to go to 170 realistically and move very, very, very fast. But this name is due for a pullback. Don't get it twisted. I love MU. I appreciate them, but they ass is coming down. And below this 157, I see us going to $150 a share. So I just wanted to make that note. Apple, though. Apple, I was just at the conference in Seattle. And for people that was there or people that maybe tuned into the live stream would have heard me. I just spoke about Apple last week making this move, right? And Apple's done it now. Now, the big question is, does Apple have enough momentum to carry itself over 260? Throughout time, I believe they will. This go round, I don't think so. I think if we were to come to 260, right, we're still $8 away, we would probably make a double top and pull back, right? So, and we may not even get to 260 right now, and that's okay. But the momentum thing, so now you got your two names that sit in your top three. They're not really generating any much more of a move. Now let's go to Microsoft. Microsoft's key level is 517, and it's not getting above there right now. Once again, these are not bad. This is not anything bad. It's just the reality. So you can see it. Since earnings, Microsoft has gassed itself out. Once again, we got to remember, I get the whole open AI stuff and all the great stuff that Microsoft's doing here, but I think people forget Microsoft has been at this helm for a while. So they're not going to just take consistent moves gapping upwards unless they have really serious news. Outside of really earnings reports, if you take a look back or recovery plays, right? When I say a recovery play, I want to speak about that candidly and make sure people understand. When I say a recovery, I'm talking about when we was in April and Microsoft was down and it was sitting at a discount. Outside of that, when you take a look at MSFT, you don't really see Microsoft trade fast. It's not a fast trade in equity. What did I just say? Off earnings. This right here is earnings. So you had a $30 gap up off earnings. Then yes, it did move to the upside, but it kind of trickled up. You didn't have a straight beeline type move. The next beeline move you got was, of course, earnings. Now, since then, it's went back to, once again, outside of earnings, what does it do? It just trickles in the direction that it moves, whether it's up or down. So Microsoft's not a Rey Mysterio type player. It's not going to jump off the ropes. It's not a high flyer. This one is more trading sideways to get to where it's trying to get to, whether up or down. So with MSFT, just to take a look at its current price action, if you notice, it's not getting above its 517. So to me, I don't think it breaks 490. I just think it probably can come back down and test that level, at least at minimum. So that's really what I'm stressing with people is like, hey, now your top three names in the QQQ. And this is one thing that I want to put out here today. Now, listen, I'm not saying that the analysts don't get it right, but I just want to take us back in time for a second. Now I'm seeing all these are the same analysts that when the stock market was down in April, they were slashing year-end price targets. It's always funny to me now that the market makes it to an all-time high. And now what we end up seeing is a lot of these companies that are providing coverage, now all of a sudden, like this is, I'm not trying to, it's just, I got to call it out. S&P can rally to 7,000, a 20% surge by year end. Now, I'm not saying it couldn't happen, but it's just egregious when you do it now. I got to call it out. Why didn't you say that when the market was down in April? Or why did you say that in May or June? Now you're saying that when the market's at an all-time high and the SPY is at 660, and now you're talking about it going to 7,000, saying a 20% surge by year end. So once again, I'm not saying that it couldn't happen. Just look at the timing of it. It's almost as if they're blowing smoke up your butt. Why wouldn't you say this before Nvidia made this move? Why wouldn't you say this before AVGO broke over $300? So when we understand what it takes to like what does it take for the S&P to get to 7,000? Let's look at the S&P, right? What it actually takes, the holding allocation, what it would take. So you could put that into perspective and say, you know what? Let's look at the holdings and let's see what names really got to charge up. So of course, it's still the same three names as in the QQQ, just different percentages because of the amount of companies. But if I'm looking at all of these five names right here, NVIDIA, Microsoft, Apple, Amazon, Meta, and then you add the sixth, Broadcom, you add the seventh, Google, and you add the eighth, Tesla, right? Now, I just looked at the three names, NVIDIA, Microsoft, and Apple. I just showed you, while probably likely that NVIDIA maybe not be breaking 183, which is the top one, Microsoft still hasn't broken 517. We just spoke on Microsoft really only moves off of earnings in a major way. So yes, Microsoft has earnings next month. So maybe Microsoft gets a move off earnings. We'll give them that. Apple, I've discussed Apple and said, hey, I see it at least maybe going to 260. What it does from there, it's either a reject or a strong break. Depending upon what the news is and what the fundamentals look like, we'll decide that. Now let's take a look at Amazon, because Amazon still hasn't broken 240. So what makes me believe when I look at Amazon's chart with no technicals on it? No, I don't need no technicals on this thing right now. What makes me look at Amazon's chart and say I'm bullish? You didn't break 240 in January. You didn't break 240 in August, and you didn't break it in September. And now you're pushing here slightly to the downside to where if Amazon loses about 211, it's night-night. Where this thing is coming back down to 197. You're hearing this here first. If Amazon loses $211, it is going to drop back down to around 200, 197. That's where it's going. I don't see Amazon breaking 240 unless you get something to come in and significantly change this thing up. So it does not have the momentum right now. We see that here plain as day. Now, when we talk about Tesla, which everyone has heard me about when it comes to Tesla, that 437, well, where is it at pre-market? 436. Even the stock that has the great setup right now, like Tesla in a really risk-on market again, where people was willing to take these shots, had this been April or May, oh man, Tesla would have been blowing through this, but it's not. So Tesla is a bit slowing down, even with this high probability setup. We all know Tesla, when this thing get moving, it gets to moving. But even Tesla in its prime best setup can't get going the way it wants to. And that's the way I'm looking at it. That 447 is sticking out there. That 437 is still not been able to just cleanly been able to hold above. I don't think Tesla draws down hard. I just don't think it blows as easy. Now, write this date down. Make sure you write these dates down, man. October 1st, which is going to be next Wednesday. That morning, we are going to get Tesla's Q3 delivery numbers. So that can be the catalyst. If those numbers come out right, that can be the catalyst for Tesla to boom past 450 and beyond. But if Tesla disappoints, or if it's, just in line, I think you just see Tesla trade sideways. Obviously, Tesla has earnings as well next month. So you're hearing this from someone, once again, I told people back at 363, didn't I? When I told you that it broke above 363, what was going to happen? People said, hey, it ain't ready yet. I said, once it gets over that 363, it's off to 400, and here we are. So now I'm telling you, if those numbers don't come out good, Tesla's going to draw down. It's going to come down to this downside. So I told you at 363 what Tesla was going to do. And actually before that, all the way back here in the early 300s, I said, whenever it breaks, that's what this right here, when we got above 350, I said, all right, that volume, Tesla got that volume. Boom. But Tesla's not the one that goes on a run for forever. Usually it's incumbent upon what Elon's doing at the time. So does Elon come out of left field and do something stupid? You never know with him. But he's got the momentum. Right now, Tesla has the momentum. The thing is, can it sustain it? That's the main thing. Google, which is Alphabet Inc., they've already given us, like, what more are we asking from Google, guys, right now? Seriously, what more are we going to ask from Google to do? Google since April is up from $140 all the way up here to maxing out at 250. If we just take it to the past couple of sessions, since here in September, Google's already given us a run for it. You guys remember that was Google. I got to give Google their flowers. They really was the ones on September 3rd that kickstarted this rally. Them gapping up when I believe that court case got dismissed. There was some other things that was bullish with Google at the time, at the beginning of September. That's what really started, that kind of ignited the engine again, because Google was the stock that was up on September 3rd, when the day after the market was down and it pulled back. We came off the holiday weekend. Everyone was spooked. Oh my gosh, the market's down. Boop, boop, boop. And I say, yo, be all right. Next thing you know, we haven't had, once again, no issues with this market since that day. So that's why I said yesterday, I said, this is going to decide on whether you keep the money that you just made over the past 3 weeks or whether you give all of the money back. These next decisions that you make is going to decide those outcomes. So when I talked about, if you pay attention to volume, everyone's always asking me, okay, well, how do I pay attention and look at volume here? Right? So let me go ahead and refresh this real quick. The SPY broke below 630 in the pre-market. 660 in the pre-market. It's at 658. So let me talk to you real quick. I want everybody to go to their Yahoo Finance. This is how you track volume. So I always talk about the 3-month average volume, but I pay attention to how trading action is during the day. One of the things that I said last week, I said, it's important to know when not to trade. You get what I'm saying? Like, you can't sit at the desk all day and chase this thing. Trust me, been there, done that. You will blow your money sitting here chasing trades all day, every damn day. That's not the recipe and the formula for success when you're chasing every tick, every ounce, because you can't get it. You get what I'm saying? And that's something that you learn the hard way if you choose to learn it the hard way, when you're trying to chase every tick and every drop. So some people might be saying, okay, well, why are you looking at the volume? Because when the stock market gets back to an all-time high and continues to make new highs, people get accustomed to it. They get accustomed to at 4 p.m. that CNBC notification coming up. Oh, the Dow made a new high, or the S&P and the NASDAQ made fresh highs today. And it just seems as if almost it's a foregone conclusion. I can say in the entire time I've been in this, every time the market seems as if it's at a foregone conclusion that it is just going to go to an all-time high, that's when bad things happen. Every single time that the market makes it seem like it's a foregone conclusion, that we just are going to make new all-time highs. I can go back to 2020 before the market dropped. 3 months in a row, you could buy calls on anything. Tesla went up $30 for people that's here. Tesla went up $30 every Monday. You could swing calls from Friday to Monday. You wasn't worried about nothing. You didn't need no stop losses because the stock market was going up every single week for 3 months in a row. So if you bought calls on anything, you made money. Now, what happened was on February 24th, 2020, if you were swinging over the weekend, you couldn't get into your brokerage account. And if you opened your brokerage account after an hour of not getting into it, you were probably down 5 figures that day, because the Dow fell 2,000 for its worst percentage drop since the Great Depression. These are facts. You can go look at them, right? And so you go back to 2018, the same thing. Market got derailed in late September all the way up until the end of December 2018. December 24th was the bottom of the market. The Dow fell 1,000 points for the first time ever. Go look back at that. Then the Christmas came. Obviously, the market's closed. The day after, the Dow went up 1,000 points. And now the market is moving back higher. That's what catapulted that run. But once again, I want to speak about volume when we get to all-time highs. And RJ's been here. Shout out to RJ Trades. He said, I still haven't healed from February 2020. Man, they just don't know, bro. They just don't know, man. And I'm telling you guys this as someone, like, bad things happen when foregone conclusions start to get written. And what do I mean by foregone conclusion? Oh, that it's just market's just going to continue to go to an all-time high with no pullbacks, or it's just a guarantee. And so when I start seeing egregious price targets put out there, it makes me a bit nervous. I'm gonna be honest with you. It makes me a bit nervous because these institutions, you got to be mindful of that. They like to sell you because remember, these the same institutions when the stock market was down that was decreasing the price targets for the end of the year. They were slashing. They were pricing in higher odds of recession. All of that stuff to spook you. Why? Because they want to get your stocks cheaper. That's what they want to do. Their name of the game is to get your stocks cheaper. So when I look at volume and I see that a lot of names on the market, hence the SPY is our benchmark, they're not even hitting their average 3-month volume. So I'm starting to see and notice that slow down when I look at Broadcom, ticker AVGO, right? AVGO is a high flyer. Usually they're exceeding their volume on a 3-month volume on a day-to-day basis. Yesterday, they did not. They barely almost got to it. So I keep that in mind when I am analyzing tickers and I'm watching. A lot of the high growth names have now started to cool from a volume perspective. Maybe their prices haven't dropped, but their volume definitely has. Even MicroStrategy, which is at 318. When we talk about Coinbase, listen up here. Coinbase and Bitcoin, right? I know I'm getting some alerts this morning. Some smaller cryptos are down, etc. This is where I say we got to be mindful of not only what sectors we're watching, but paying attention to where the money may be rotating. Another one, and it goes to prove my point. I just mentioned this yesterday. Anybody check out OKLO today? They are down 11% in the pre-market. 11%. This is why I say the high flyers, the Rey Mysterios, the Jeff Hardys, these names always drop the fastest when a slight little bit of panic comes in. So it's good when the name's going up, right? But if you don't understand why this name went up, because primarily this name is not profitable. It's not a bad business. It's just not profitable. It still has a lot of things to do for themselves. They have a lot of potential. We will say that. So OKLO is coming down here in the pre-market, profit taking, rotation out of this name. And so you have it to where now majority of these stocks are sitting in overvalued territory. Some are not even profitable yet. And now we're seeing these names start to rotate downward. So I look at it and say, okay, you got to protect yourself, especially on the downside. Another one, this is an aerospace one. This is a bit larger from a price perspective, but I want everyone to pull up Axon. They were down 10% yesterday, right? So even Axon, which is a name that does sit here with a high P to E ratio, 172. That's the reason why I wanted to bring notice to it. Axon really probably should be trading, honestly, around maybe $400 to $500 a share, realistically. They should be trading $400 to $500 a share where they sit at, right? They should not be trading here. But there's a lot of names on the stock market, CrowdStrike included. You guys know my feelings about CrowdStrike and how I believe they can go to 1,000. The only way they do that, though, is they have to prove consistent profitability and increase their profit. Now, the thing about Axon is they're making about $4 EPS a year the past 12 months. So they're in a better position than what CrowdStrike is because CrowdStrike is not doing this. But the reason why I want to stress this is because we always look at when the tickers go up, but we fail to think about when those same tickers that you've been riding sky high go down, how that could either hurt you or how you could either too capitalize off of that. So when I highlighted the people that I believe will go into maybe a small risk off type fashion, it's just because I'm looking and saying valuations, right? Like we don't have the gas in the tank for AVGO to shoot up, blow past 360 right now. So when I see the S&P talked about in NASDAQ price targets being increased like crazy, it's like QQQ just hit damn 600. And now you come out with, oh, the NASDAQ's going to be up another 15% by the end of the year. Once again, it can happen, but we have to look and dissect as to what names would need to be able to produce it. So I say the timing of it is just a bit more than just a bit off. It's all the way off. The timing of it to me is BS. Because once again, you saying that you believe these names are going to hit those levels, show me. I want them to show me, right? Where are they getting that from? Is Nvidia just going to go to 200 easily? I don't think it's going to go to 200 easily. Will it hit there one day? I believe wholeheartedly so. But it's not going to be a cakewalk to get to 200, not with valuations elevated. So the breather that comes in will likely be a lot within the ARK ETF. So I want to talk about the ARK ETF, especially because this has been one that when everyone was bearish on the ARK ETF, I was one of the only and sole bulls. Everyone said Kathy Woods, she can't run it. Everyone said Kathy Woods ETF should be delisted. Everyone said ARK was dead. Well, you look at it, it's well and alive, ladies and gentlemen. Well and alive. Look at the past year of this ETF. And since April, Kathy Woods ETF has doubled. Now, I don't want to hurt nobody's feelings, but the facts is just the facts. Let's look at the ARK ETF. Let's go to a monthly time frame. And I want you to look at the last time that the ARK ETF doubled. I want you to go back to 2020. Now, this is just a reminder. Now, it did more than doubled. It pretty much gave you a 3X, which is what everyone got caught up on. Here in 2020, you went from 50, right, all the way to 150 very quickly and then sold back off, went to distribution, all of that. For the past 3 years, on mainly every weekly watch list, I have told people that the ARK ETF should be your go-to. That should be your go-to buy. For the past 3 years, there's been not a bigger bull when it came to ARK. Just the reality. I say, yo, it's in an accumulation phase. When it breaks out in the next few years, you're going to make a bag. Here we are. If we look at the ARK ETF, this is why I have to cover it because I've been too bullish on this thing. And it's not that I'm switching bearish, but I'm about to give people a reality check on this thing. Just so no one, I'm going to put it out here. I'm going to put a reel up. I might even put it right on my forehead just so no one misses it. Listen, Tesla, thank you. Coinbase, thank you. Roku, your ass didn't do much. Roblox, we appreciate you. Tempest, you did your thing. CRISPR, okay. Shopify, we appreciate you. Robinhood, we appreciate you. Palantir, we appreciate you. AMD, we appreciate you. BMNR, you're just getting into this party. So we can't appreciate you yet. Right? Outside, so out of these top names out here, BMNR and Roku are the only two names, and CRISPR Therapeutics will be probably the only 2 to 3 names that I'll say no thank you to. The rest of the names, we appreciate you. The reality is that if you look, I mean, even Palantir, this is where I give a little bit of grace to people who talk about Kathy Woods. Why the hell is Roku higher than Palantir? Respectfully. Why the hell is Roku higher than Robinhood? Why the hell is Roku even higher than Roblox? This has been the main mistake here. And as well, not having NVIDIA here. When she sold NVIDIA and having Roku at number 2 is the 2 main mistakes. No one's above making a mistake, but that's just the 2 mistakes that really stopped this ETF from being over $100. Because if Palantir replaced Roku and NVIDIA was here in the top 5, ARK ETF would probably be at $110, $120 maybe, just off of having NVIDIA in the top 5 and having Palantir in the top 5. And you might say, okay, what would make you say that? Well, I just asked you to go pull up Palantir and NVIDIA's charts the past 3 years. and then go pull up Roku's as well here too. You get what I'm saying? It's no comparison. Roku hasn't done jack nothing, and we already know what Nvidia and Palantir have done. So that's how we come up with that, right? So we can account that the ARC would probably be up another 20 to 30% from here alone, just by having those two tickers in the top 10 of the ETF. Simple as that there, right? So now I'm looking at across the board, the ARC ETF. Why do I got to highlight it? Well, this $84 level is going to be tough for us to get through, right? We also have names like, for example, we're looking at Shop, which I highlighted and said, hey, we got to get above this 158. Shopify did not do that. It came right to 158 and rejected. We covered that on the watch list. We said, yo, if this thing don't get above 158, it can't go nowhere higher. So rejected here. Tesla, we spoke about Tesla, that 130, not 137, 437. So Tesla and Shopify both can't do it. We said, you know what? Maybe they got enough gas in this engine. They both cannot do it. So this is why paying attention to everything that I'm saying and jotting it down. When I spoke on Shop, I clearly told people, unless this thing is getting above 158, it's not going to break, right? It's not going to break out. It had to get above 158. It went there on Monday, reject, pull down. So here we are. Now here on Tesla, pull down. We're trying to still get above this 440, and it's not happening right now. At the same time, let's pull up the ARC ETF. The ARC is a bit exhausted. Why wouldn't it be? The ARC is up 100%. And so this is where the reality moment. If you are in the ARC ETF and it's up 100%, this is why I went back to the past. This is why I said I didn't want to cause nobody no trauma, but I just got to call it what it is. The ARC doing this in 4 or 5 months is not normal. Stocks going up 100% in 3, 4, 5 months is not normal. That's not normal. It don't always work like that. And usually more times than not, when that happens, that leads to profit taking. So I'm telling you here now, if you're looking at this ARC ETF, I get it. Tesla's googly eyed. And very well, Tesla could try to take a run to $500 a share. It's at $500 a share. But without consistent momentum, I'm telling you here now, we will pull back. I'm telling you here now, you will pull back. The high growth names always get slaughtered first. So when people ask me, what's the names when the market come down? It's the same names you was chasing after when the market made all-time highs for 3 months in a row. What names should I short? What names do you think is going to pull back? Well, don't you think the same names that ran up to the upside that's not consistently profitable yet, don't you think those names will be on the hit list? So I talked about Circle Internet Group and as well CoreWeave yesterday. You guys know my thoughts on them, and I'm salivating right now because all they've done on the higher time frame, honestly, after this bloodshed that they had for about 6 weeks in a row, is they just made the past 2.5 weeks, they've just made a lower high. So don't think that Circle Internet Group and CoreWeave is out the woodworks yet. Don't think that they're out the woodworks. The lockup period just ended for CoreWeave, the final lockup period. This stock ain't out the woodworks yet, ladies and gentlemen. It's ready, in my opinion, and any turmoil that happens in the market, you're going to see it come right back to the downside. So I want to stress this, right? I want to really, really, really stress this for y'all. Please do not fall victim to these trash IPOs that come out and they pump these on retail investors and people that don't know what they're buying. These are what I call hype beast investments. And a lot of people get caught in hype beast investments because they listen to people who are talking about, oh man, I can go to Rivian, right? Let's take a look at Rivian here. I'm going to ask you something. And Rivian is straight hot garbage. I'm just going to call it what it is. This is what hot garbage looks like. You come into the stock market and you never trade above your initial IPO price that you come in. And all you do is dump on retail investors. Rivian is trash. Hear me carefully. It is hot garbage. And this is the behavior of what happens on a lot of these different investments that come into the marketplace is they just dump on people and they just get you to become exit liquidity. Now, I'm not saying that Rivian I'm not saying that Circle Internet and CoreWeave end up being like Rivian, but they have traits of which you can see dumps. What I think is more likely is that you could see one of those names be more like a Snowflake, where when Snowflake first came to market, you know what they talked about? Warren Buffett invested in it. So guess what? It's going to be boo, 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 boo. That's what took this thing up when it first dropped and it came out after this pullback. Warren Buffett's in it. So then it shot up to 400. But then people realized that Warren Buffett can be in something, but it could be so micro and so small. It's not going to affect him. He could just be taking a super small chance, which he can afford to do that. But people be writing home on names just off of speculation sometimes. And it got caught. People got caught holding the bag. Now, Snowflake over the past 3 years, around 140, 160. For those that have been here, you guys know. Anytime that Snowflake's been in that level, I've recommended it because it's been in the accumulation phase. So this is what I see, my prediction more so for Circle Internet Group and CoreWeave. It's not that these businesses won't become, great companies. I don't know if they'll become upper echelon companies realistically, but I think that these businesses are pretty solid, and I think they will become consistently profitable quarter by quarter and year over year. I just don't think it's going to happen right now. And in the midst of that, we have to continue to get coverage from these companies, right? And what do I mean by coverage? The more analysts that start to cover these companies, the easier it is for people to dissect and understand. Because a lot of times people wait until the analysts have full coverage. You get what I'm saying? Why would you invest in something if only 3 analysts are covering it versus the stocks that you own where there's 30, 40, 50 analysts that are covering that particular ticker? So that's my thoughts when it comes to some of these high growth names is, once again, the same names that shoot up to the upside and they leave you with your mouth dropped and googly eyed and saying, man, I can't believe that stock just did that. Those would be the same names that you add to the short list to the downside, right? This isn't a knock to Robinhood, but Robinhood's down $3 today. At some point, Robinhood is going to pull back and have some profit taking. Doesn't mean that Robinhood's coming back to $70 or $50 or nothing like that, but just there's ebbs and flows in the market. There's going to be times where certain stocks like this are running. There's going to be certain times when stocks like this are coming down. Now, I don't think Robinhood's a major pullback because I think Robinhood's changed their business model. There's actually some companies that can take some notes from Robinhood and what they've done. And those companies that can take some notes are CrowdStrike. Robinhood has become consistently profitable. This is why Robinhood has made the move that it's made, right? Not just since April, but just even if you go back to last year, August, right? Obviously, we know what happened in February, so there was a pullback. But even if you look last year in August, we went from we went from August 12th last year from $16, $15 to 60. So Robinhood did a 4X in relatively about less than 8 months. And a lot of what justified the move to even bring this stock from $30, which has done another 4X since April 7th, Robinhood is up 4 times what it was. But the move is justified because the earnings have actually increased. So these are moves that you can actually quantify and justify, right? Now, one of our most recent movers, Oracle, I asked people to set alerts for 290. Oracle, where they at? This pre-market. They are at 299. So 299 is where Oracle is at right now. I have this right here, this alert for 290. We had a double top right here at 330. So now Oracle, we know Oracle's made a nice move, but I think we all know this. AVGO's getting ready to come down and churn down here, pull back a little bit. So you got some blood that's potentially coming on the street. What's the first tickers that always go anytime? It's the ones with the recent moves, right? And so Oracle, we love them, appreciate their business. We got to put this into reality though. Oracle is up from $125 since April, all the way making a high at 350. I mean, come on, ladies and gentlemen. We got to know that Oracle is going to have some profit taking. That's just reality. Good bit, not good business, great business, making a lot of moves, a lot of moves. So long term, Oracle's good. We're just talking about in the short term. Yes, you could see a bit of profit taking. So the overall theme of this is once again short term profit taking for long term prosperity. That's really what it just comes down to. Short term profit taking for long term prosperity. These names that you see pull back, like I said, I think the overall markets, the Qs and the SPY pull back anywhere from 2 to 5% from here. It just sets you up for the next run. Once again, if you're listening to me carefully here, it sets you up for the next run here to the upside. So that's my thoughts. A lot of the 2X and 3X levered ETFs, because there's a ton of people with questions. Should I be buying Soxel? No. And you can actually make it HE double hockey stick. No. You should not be thinking about buying Soxel at this time. No 3X levered ETFs should you be buying. You should be selling right now. OKLO is down 16%. That's what profit taking looks like. And it usually happens overnight like that, in that fashion on tickers like that. Let me get you with MU, please, since we're talking Soxel. So Micron, we were very bullish on it on the upside for sure when it broke, pre-earnings. We saw this. They had another bull flag, broke out and hit 170. So let's talk about Starbucks to close stores / 900 jobs. Well, proof is in the pudding right there. When you take a look here, 157.43. I want you to watch that level, 150. If we stay below that 157, MU is going to unroll itself to that level. So it's looking to poke down and some profit taking. Once again, we talk about MU. We understand that MU is taking strides. If you listen to their earnings call, you see. But short-term profit taking sets up long-term prosperity. So MU will probably pull back down a little bit, but it's a great name in the making. And it'd be hard to argue of saying, hey, I take MU over AMD. That's a tough argument to make, as far as you look at its performance. The next thing I want you to watch is the VIX, guys. So really watch the VIX. I want you to put this and set an alert for 20. Right now we're at 17. So we don't see much that's happening in the market to the downside outside of a few tickers right now, more so profit taking, right? But I would stress to everyone here that is listening, you have SMH, which is at 317. Let me actually pull that up. So the VIX is here, is right here at 17. 20, I want you to put that alert. Since Tuesday, September 2nd, we went from 282 hitting 325. ETFs typically don't move like this. So we look like we're about to break this support on SMH. This is make or break. I have alerts for 312 and as well 308 on SMH. If we are to get down to 308, we'll be seeing NVIDIA sub 170. MU will probably be at 150. We'll see AVGO sub 330, etc. So this move to the downside, we mainly believe because a rising wedge is a bearish reversal pattern. So we're expecting that even in the short term, we break outside of that pattern and pull downward, right? And so this is what I wanted to make sure that you guys understood to see this move here. So you have SMH coming down to this downside. Once again, listen to me carefully. Short-term pullback. We ain't talking macro. We talking about short-term pullbacks. So do not get wrapped up in, I'm saying, and Lawrence is saying, don't nobody go and say, Lawrence said the stock market is crashing. Never said that. What I highlighted was we have some stocks that are a bit overextended that, think about it. If people are up these dollars, they're going to take some profits. It's just the reality. Even AMD can't get enough juice to break over 164. It's at 158. So you want to watch it at 150. Same level as MU, $150 a share. So that is pretty much the bulk of the conversation today, is just to remain and make sure that you are paying attention to these macro levels. These are super, super, super duper important. Broadcom, ticker AVGO. There's a level when you go up fast, here's what happens, right? You leave yourself susceptible for real pain. So that 331, after that, I mean, you're looking at coming down in the 320s and even dropping to 316. QQQ, set your alerts for 590, guys. A break underneath 590, you can book it. The QQQ is going to go back to 586, right? Worst case scenario, you go down to 580, 583. So I'm telling you here now, listen very carefully. 590, if the Qs break below, it's night time. SPY, we think it can go back to 649, 650. Right now it's at 658. Some people might be saying, okay, why is that? So right here, if you pay attention, as we're starting it outside of really 655, we've already broken outside of this rising wedge pattern. So now on the SPY, we're slipping a bit. So 650 incoming. We expect a drop here. If NVIDIA drops down, listen to me carefully. NVIDIA goes below 170. You take a look at Apple. If Apple breaks back below 250, that's going to push it down. Amazon, we looking at Amazon, we like, damn, you can't even break 240, bro. But I hear these analysts saying end of year price targets another 15, 20% surge. I want to know what names that they looking at that got that potential, because NVIDIA getting over that all-time high is not going to be easy. And if you remember, I want to go back to a time on something. This will make a lot of sense to people. I'm pull up one ticker to make this make sense. You remember when Apple was supposed to go to 200? This is going to make a lot of sense to people. And I'm not talking about when Apple went to 200 here in 2020, when it went here in 2024. People was talking about Apple going to 200 back in 2022 and 2021. Oh, Apple would be at 200. Apple would be at 200. And you know, it's funny. I didn't realize this whole time that it was right near the same level that NVIDIA was hitting. And it was actually 183. Damn, that's crazy. It's January 2022. Apple's going to 200. You know that Apple didn't go to 200 until a year later. And they was talking about it here after the split. They say, yo, buy the 200 leaps, buy the 200 leaps. Apple's ass never went to 200 until 2 years later. Now, I'm not saying that happens with NVIDIA, but this is the piece that ends up happening. People think that things start to become guaranteed. You don't think that institutions is watching NVIDIA at 200? That is a huge psychological level. Also, that would mean that NVIDIA is getting inching closer to 5 trillion in market cap. So we got to understand, we just took your ass to 4 trillion. Now you want us to take you to 5? Prove it to us, bro. Prove it to us. That's what investors are saying. We just took you to 4. Now you want us to take you behind the 5. Prove it to us. So that's why I want to say, like, when it comes to, 200 on NVIDIA, it's going to happen. I don't doubt that. It just won't be as fast as what people want it to be. And so we create these level of expectations. That's why I played Mark Douglas earlier in the week, like 5 to 7 minutes on our class on Tuesday. We a lot of times let our expectations of things cloud our judgment. Always assume that anything can go either way. And this is what I'm going to leave everybody with, some food for thought. Always assume that anything could happen, that it could go either way. And you have a plan of action of if it goes up or down of what you're going to do. Don't become biased. There's going to be things in the stock market you like and you love, right? But you got to kind of really get your mindset geared to understanding that, yes, there's going to be some things you like and you love, but you can't ignore the reality. For example, I think everybody knows I like Tesla. But if Tesla starts rearing itself to the downside, I won't hesitate to short Elon Musk stock. I don't give a damn. So you got to have that mindset of there may be things that you like in the market, but you should always try to your best to keep really a unbiased approach and an unbiased opinion. You may have all the thoughts in the world as to what's going to happen, but having a plan of action in case it doesn't is always going to be what protects you. So I want to make sure that I highlight that for people that are listening, because you're not going to bat 100 with this. This is a game of adjustments. I always bring football into this, or I always bring sports, but football I always bring into this. because that's a game of adjustments. And this is the same thing in the stock market. And if you don't adjust, you get your head take off and you get benched. I'm sorry, New York Giants fans, right? This is just a reality. When you don't make adjustments, you get benched. You sit on the sidelines. And the reality is you got to get into the game. A lot of people are scared to get into the game because you could tell who watch tape and who don't. You don't watch tape in the NFL, you don't ever see the field. So if you don't watch these charts, why you in the game? Why you open that brokerage account and you in a position in options, but you don't have technical set up? You don't have a level defined. You don't know what coverage is. Just the reality. Make sure you're watching your tape. Make sure you're paying attention. Make sure you have your chart set up. You should never take a trade if you don't have a chart set up here. Never take a trade and you don't have technical levels actually defined, because that's going to help you with your entries and your exits. A lot of times people are taking trades with no levels, no nothing. So I want you guys to really hear that. Do not just get into things. Roll your tape back. Spend time studying this thing. And don't sit here all day chasing positions. Be very mindful of that. Do not come to the stock market every day chasing trades and chasing stocks. Do not make a habit of that. That's a habit for a disaster. And take that from someone. When I first started this, I did exactly that. You sit back and you give gains back to the market. You turn a $600-$700 day into a negative $200 day. Just giving money back to the market. Whole time, that $600, even if you did that 3 times a week, that's an extra $1,800. You times that by 4, that's a nice salary for the month. So the piece that I want to say is the little things matter more than doing too much. Don't do too much. It's all right. The market will be here. Let's focus on it. When the volume gets low, close the computer up and go back to what you got to do. Whether you got a business or whether you at work, get some things done. So when you know you got to be on this market, the boss ain't coming over say, hey, we got to have a meeting, or hey, you get that done yet. And now you can't get out the trade because you ain't do the work in the downtime of the market. Leverage this downtime when I talk about volume wise. Leverage that to get other things done. The market don't have the same weather every day, the same way we don't have the same weather outside. So sometimes it's going to be sunny and rainbows. Other times it's going to be rainy and slushy. Sometimes it's going to be a little bit of snow. Sometimes it's going to be some lightning. So the weather in the market should determine and decide what capital size you're trading with, what moves you making. If you know it's cold outside, you ain't going out there without a jacket. You know it's hot outside, you ain't going out there with a sweatsuit and a hoodie over your head. So dress appropriately. The same way you would do it, the same thing you're going to do in the stock market. You examine what's the weather outside here in the market, and you dress appropriately. This thing will be here. And listen, when the stock market ain't here no more, that means the world's over. So you never got to worry about the stock market not being here, because honestly, if the stock market ain't here, we got bigger things to worry about. So just know that you right on time. Don't fall victim of the comparison thing. Some people saying this person, blah. Focus on your race, man. Ladies and gentlemen, you are right on time. Do not fall into comparison. But man, I feel like, just focus, run your race, tunnel vision. You going to get there when it's your time, but it also is going to be determined by what work you putting in. Some people is looking at this person or looking at that person, but you ain't putting in the same hours they put in. If I roll their tape back, they put in 100, but you only put in 5. You can't expect results where the person put in 100 hours, but you only put in 5. Just the reality. So practice makes perfect. And I'm about to sign off for the day. So I appreciate y'all. I'll post this thing up, and hopefully you guys took these notes. Let's get to it. High energy, stay alert, stay vigilant, and stay vicious out there. Get what's yours. I appreciate y'all.